I jinxed it. I put a video out last week explaining how the stage 3 tax cuts are going to work. That's the original stage 3 tax cuts that were introduced by the Liberal government back in 2019. And the current government has come out and changed the rules. So instead of the maximum tax cut being $9,075, the maximum is now only $4,529. But it does benefit some of the lower to middle income earners a little bit more. Now, I don't want to get political on this channel, so whether or not I, you, or anyone else agrees or disagrees with the tax cuts is completely up to the individual. We all have a right to have our own opinion. But what I do want to do is explain how these new tax cuts work and give you some examples of how much you might be able to save at varying levels of income. Hello guys, Brad here from The Guided Investor. Welcome back to the channel for another video. If you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. And today we are talking about the updated stage 3 tax cuts. Under the new system, the 19% tax bracket for incomes between $18,200 and $45,000 will reduce to 16%. The current 32.5% tax bracket will reduce to 30% and apply to incomes between $45,000 and $135,000. The 37% tax bracket will now apply to incomes between $135,000 and $190,000, pushing the top marginal tax bracket from $180,000 to $190,000. This little graph I found in the Financial Review gives a good overview of the current tax rates, the old stage 3 tax rates, and the new stage 3 tax rates. Depending on your taxable income, the new stage 3 tax cuts can save you up to $4,529. This table gives you a good idea of what the tax savings look like at different levels of income. The more you earn, the more you stand to save, with the maximum saving of $4,529 coming in with taxable income of $190,000 or more. Last time we talked about the original tax cuts, I gave you some strategies to consider in order to be able to minimize your tax, given that the tax rates in the current 2023-24 financial year are higher than what they're planned to be next financial year, given these new tax cuts. Now, while these strategies aren't as relevant, given the maximum tax saving is lower, they can still save you a little bit of tax, so let me just recap what we talked about. In order to reduce your tax payable, you can consider the following. Utilize your superannuation carry forward concessional contributions now instead of in the future. If you're self-employed, withhold additional business income in your company and take more profit next year. Hold off on realizing capital gains this year and consider selling assets in future financial years. And bring forward any potential deduction like prepaying interest or expenses. If you're thinking about implementing any of these strategies, then obviously do a little bit more research and seek professional advice if you need it. But that's it for me today, guys. Hopefully I don't have to do another one of these stage 3 tax cuts videos. They're getting a little bit old. But if you found this video useful, then please give it a thumbs up and I will see you guys in the next one.